Good evening and welcome to this edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I am Ibong. We begin this evening with history. The Nigerian exchange has officially moved to a T+1 settlement cycle, meaning trades executed today are now settled the very next day. And this comes just 6 months after the NGX migrated from T+3 to T+2 in November last year. That's a big sprint by any standard. And Nigeria is now the first market in Africa to achieve this. And as our report shows, it puts us ahead of some of the world's most sophisticated exchanges. We have the details in this report. Take a listen.
History was made on June 1st, 2026, as Nigeria joins its leading global stock market contemporaries in carrying out the T+1 transaction settlement cycle, becoming the first market in Africa to adopt a shortened investment settlement framework. Speaking at the milestone event in Lagos, the Director General of the Securities and Exchange Commission, SEC, Motimi Agama, says the move positions Nigeria among markets accounting for nearly 60% of global market capitalization.
The market thought about it. It wasn't even the SEC, it's the market that decided this is where we are going to. But what's important is that you start a journey and you get there, deliberately and intentionally, to change the market. In the process of doing that, not everybody will be happy, certainly. But one thing that is important is that no matter what your complaint is, we are ready to make sure that we make you happy. It's our responsibility. We are ready to address the concerns that will ever happen here. So, the T+1 settlement cycle is now live, and with it, a new era has begun.
On their part, the leadership of the NGX say the T+1 settlement cycle will enhance market efficiency, improve liquidity, and deliver a better trading experience for investors.
If you buy today, your account will be debited tomorrow. If you sell today, you will get payment tomorrow. When the change means for seasoned investors and market practitioners is further turnaround, increased liquidity, and more efficiency in our market. The move reinforces the Nigerian market as one of the most efficient markets globally. You may recall that we are one of the first exchanges in Africa to transition from call-over system to automated trading system. I can see some of my friends that are here, they can recall in the same period that we are here, when we are making that call-over system, when we have already passed that level. People have forgotten where we are coming from and what we are today.
There's a lot of work going on now on liquidity. The DG also is spearheading. We've had several meetings, not just market liquidity, market depth. And you start to see a lot more on that. To underpin all of this, of course, is technology, which at the CSS board, we're spending a lot of time on this. How do you have a market that is ready to drive and handle a lot of this traffic that we're seeing now in the markets? There's a big mega listing that is ahead of all of us now over the next few months. How do we make sure that as a market, our technology systems are ready, our data centers are ready, our processing, our trading, etc.? And then away from that, how do we start to position the entire ecosystem away from just our regular shares and the regular equities that you know us for?
With T+1 now fully operational, market stakeholders say the focus will increasingly shift towards future innovations, including enhanced digital market infrastructure, greater automation, deeper liquidity pools, and the eventual possibility of same-day settlement as global market standards continue to evolve.
A historic week for Nigeria's capital market. However, it was a brutal one on the exchange. And some numbers from the MBS that look great on the surface, but when you look at them very carefully, we've got a lot to get into today. We'll hope we have the time to. But I have two guests on set with me today, and between them, they know the markets. They cover it from top to bottom. First of all, we have Mr. Seyi Owoturo, is the immediate past president of the Institute of Capital Market Registrars, currently heading Coronation Registrars. Mr. Owoturo, welcome.
Thank you.
And we also have Mr. Kurfi, Garba, CEO of APT Securities and board member of the Securities and Exchange Commission. Mr. Kurfi, it's good to have you join us.
I'm happy to be with you.
Now, the NGX, we just saw that report. We just transitioned, very historic one, a big one for Nigeria, from T+2 to T+1. the first in Africa to ever done that. Like, we've just hit that milestone. I'm sure everybody would try to catch up right now. Americans, they got there, that was just last year. Europeans are planning theirs for 2027, and we've just done it in 6 months. Very phenomenal. And Mr. Owoturo, how significant is this? Because someone watching us right now will say, so I get my money the next day. Why should they care about this?
All right, thank you, Ibong. You know, for capital markets, I've always tried to do these things faster. When you trade on day T, which is a T, all right, before now, last year, it used to be T+3 for Nigeria. It meant that if I sold securities today, I get my money on the 4th day. When you look at the fact that capital is fungible, people are looking for where to deploy capital. Now imagine that I have assets locked up somewhere. I sell today, and I'm waiting 4 days to get the money. Then you are not really encouraging people to come to the capital market. The capital market really is where you can really improve the productivity of an economy, all right? So when transactions now settle earlier, what it means is that there's less risk, all right? People are less exposed to, there's a cost of funds, all right? Capital has a cost. So if I'm waiting 4 days, I've sold, all right? So I'm not benefiting from any changes in prices. I'm no longer, so that money is locked up for 4 days. I am actually losing money, all right? Because I could have deployed that capital to something else. So for those who are investing, it's very critical. And then especially for foreign investors who are also exposed to foreign currency risk, they have to move money across borders. Now, if they can move it faster, T+1, it means that their risk significantly reduces. Okay,
but does the market have the maturity to handle it? Especially, you know, every value chain now in the stockbroking market has to be involved there. We're talking about the brokers, the custodians, the post-trade infrastructure, moving monies from sides. Have we gotten to that point? Are we there yet?
Interestingly, I think Nigeria's market was already primed for this. The technology exists, all right? Don't forget that we've always done DVP, delivery versus payment, meaning that there's an infrastructure for ensuring that people deliver securities and they get paid. All right. The question is, you just have to do it faster. People are already trading through FIX. All right. Trading today in Nigeria is remote. Very few brokers go to the floor. So the system was already primed. I think what the current SEC has done is to say, look, we've been talking about this for too long. All right. We have the structure, we have the technology, we need to do it now. I think some segments of the market may struggle a bit, but the structures are already there. The CSE is set up for it, brokers are set up for it, they are trading straight to the, you know, so I think that, have you heard anything in the last, it started on Monday. I mean, the markets are going, I'm a registrar, we are receiving data from CSCS, we are processing those transactions as we get them. So
we'll hear that from Mr. Kurfi. Now, Mr. Kurfi, coming from the broker's desk now, monies have to be moved. You know, people who sell today, they have to receive their money the next day to be able to do transactions. That's for the big institutions. I'm sure they're liquid enough to be able to make money available. But what about the small retail stockbrokers? How is that for them? Is there a liquidity gap that you've observed this week as a result of this?
For the small retail, there is no issue. Because the retail, they don't buy on credit. Exactly. They make sure that their money is available before they take position. But where we have a challenge is the institutions and most of the foreign investors who use custodian. However, we mitigate that by ensuring that the market closed by 4 o'clock, by 5, they all got their contract note. So having got their contract note, they arrange for the money to flow the next following day. And we make sure that as early as 10, all the money that's supposed to go for transactions have moved into the appropriate bank and they execute it. We have no issue. Yes, some of the foreign investors wanted to say, why don't you delay it for some time? We say, no, we are ready for it. The banks are ready for it. The CSS is ready for it. The broker are ready for it. Let us start. And we have started with no issue. So for all those that the foreign investors are the ones that are likely have a little challenge because they have to move their foreign currency, convert it into naira and this. But within 24 hours is good enough for them to do it because they get their contract note 1 hour after trading. Remember, in the first, it takes us 6 months to get delivery. Now we are getting delivery for the cash 24 hours after. But remember, for the settlement of stock is 0. You can buy your shares and sell it now. So for the shares, we don't even have settlement issues. You can buy and trade. Many people buy in the morning and sell in the next 1 hour. And this is done perfectly. So for the money now, we move to 24 hours. And this 24 hours is T+1, and it is working. And I believe that the others will come to learn from us. It is done, and it's done very well.
Definitely something for others to learn from, especially other African countries now. But speaking of something to learn here, just to wrap up this, T+1 is here to stay. They say it's the best thing to happen to us, but it might not always be the best in terms of maybe the underlying issues that we have not spoken publicly. You had this SEC DG talking about not everybody is happy about this. And so I want to understand what he really meant by that when he said not everyone is happy about it. You're on the SEC.
Yes, those who are not happy are the institutional investors. Because the institutional investors, they buy on credit. They wait until they got their contract note, which cannot be issued until the market close. The market closed now by 4 instead of 2:30. So the time is now longer than. So by 4 o'clock, we now start raising the contract note, which we submit to most of the institutional investors and custodian by 5. So when you look at by 5 p.m., most of the banks have closed. However, they just prepare and give instruction the following day. By early morning, the bank move the money because the funds are there. So they do it. The only one that have a little challenge are the foreign investors who have to convert FX, their US dollar or whatever currency, into naira, then from naira to this. But that is an arrangement with their line bankers. Most of the line bankers give them line credit. So if they just consummate their transaction by today, the following day they credit the bank for the settlement. Then the other transaction of the conversion of the currency will be between the bank and the custodian, or the bank and the investors. Those are the ones that have a little challenge, but I believe with time it will be over, because they too also they want to get their money timely.
Okay, definitely. Mr. Owoturo, I just want to ask this. What is it about this T+1, this transition, that could, in your own opinion, maybe go wrong, that we have not spoken publicly about yet? Very quickly, let me hear your opinion on that.
I honestly don't see, like I said earlier, and Alhaji spoke to it, our system was already primed for it, all right? We don't have transaction failures like some other markets, because our transactions are largely pre-funded, like you said. Aside the fact that operators, especially the smaller ones, may need to do a bit of investment in technology because of a faster pace in transaction settlement. That may be one of the challenges, all right? But in terms of the market structure itself and the overall market, I really don't see where that challenge will come. Don't forget that transaction flows are brokered through the NGX to the CSCS. CSCS is a clearing and settlement house. And the CSCS technology is robust enough to manage this. It's a question of technology, really.
So we are there. We're saying that we are there. What I'm hearing is that we are there, we're primed, and liquidity, we can manage huge ticket transactions without any issue. So, Mr. Garba, you sit on the board of the SEC. Is there anything in you, maybe you would have felt we could have done differently regarding this T+1 settlement cycle?
Well, I think there is little we can do, because the truth of the matter that we have envisaged failure of the transaction, and there is a guarantee fund. Every trading license members have deposited an amount as a guaranteed trust fund kept by the CSS. In the event of any failure of transaction, they will use that money to offset it immediately. Then later on, they will take the necessary measure to recover their money. So with that guaranteed trust fund, it gives them 100% assurance there will be no trade failure. And that is why you never had trade failure, because it has been envisaged And that amount has been set aside to mitigate in case of any trade failure. But aside that one, there is no issue.
Okay, so we'll continue right after this break. We'll take a moment. Capital Market, we'll be right back. Don't go away. Welcome back. If you just joined us, we're talking about capital market live here on Channels Television, and we still have with us in the studio Mr. Seyi Owoturo, immediate past president of the Institute of Capital Market Registrars, and Mr. Kurfi Garba, the CEO of APT Securities. We're talking about the T+1 transaction and how huge it is for Nigeria, for Africa. We're going to be copying us soon. But talking about the irony of this happened in the week we saw a huge sell-off on the NGX. It launched on Monday, and by Thursday, the market has shed about 5.1 trillion naira. Some people will say the timing possibly was wrong. Others will say maybe because of the T+1, investors are able to get their cash faster, and then that's why they're selling and taking all the money out of the exchange. So, Mr. Kurfi, was that what happened? Can you tell us about that?
Probably we may say that people wanted to test the system to see that if it is really working. Those who have tested it, they have tested it, but that gives opportunity for the buyers. By Friday, the market bounced back because some of the stock they have lost substantially that people see opportunity to take back. And if you look at it by Friday, it closed positive. And now I'm expecting more because now people see that there is no difference from the money market and the capital market because of the time value of money and the rate. Remember, MPR, we are talking of 26.5%. This is a high rate. So with this high rate, you hold money unnecessarily, you are talking of time value of money. By making T+1, there is no better time than now. So the time is right, the rate is right, and I can assure you, you will see more increase in the volume and transaction generally. We are expecting more of Gen Z to come into this market because why they are into forex and crypto because of the time value of money. Now they see that the capital market gives them high return, and there is time value. You sell your stock today, you get your money tomorrow, or you can even buy and sell the same day. These attract more of Gen Z, and I'm expecting more inflow of the new investors into our market.
Definitely, we're waiting for the Gen Zs to join us. But Mr. Owoturo, I know that you're a registrar, but you are following the market closely. You trade in this market, I'm very sure of that. But let's talk about this sell-off. 5.1 trillion naira wiped out in 4 trading sessions. The oil share index, we see it's currently sitting at 242,593 points. Oil and gas was the biggest casualty here. We see it down over 5%. Yet to date, however, we see it's still positive. So the positive NGX story is not yet over. We are still in the green. But it was a painful week. Is this the market doing what healthy markets do, or is there something else wrong here?
So, I mean, if you look at today, year to date, NGX is about 55% return. Although I largely alluded to maybe some people are testing whether T+1 is working. But also you'll see that there's been significant price movement this year. People will be taking profit. I personally took profit, and I'm planning to go back in. You know, so this is how markets work. Yeah, and I don't see that it is unusual. At 155 trillion, I think, today. Market cap.
Yes, 155 trillion.
About, yeah. Yes. What percentage is that?
So percentage of, in terms of what?
The total capitalization. So the point here is that markets move in whatever direction. People take profit, people take position. So I don't think it's unusual. I don't think so. Okay. And the market closed positive.
Okay.
That same week, so yeah.
Well, I just want to, but the week to date, we are in the negative. So even if we rebounded on Friday, we have a negative.
Let's see what happens
Let's see what's on Monday. But Mr. Kurfi, I want to understand, who is actually selling? Who sold? Is it institutional?
You see,
who sold?
You see the information got. We are expecting the result of 2 giant oil companies, that is the Aradel and Oando, and they all promised to release their result on or before the end of May. At the last day, trading day of May, that is 29, Friday, they all released their information that for reason best known to them, that Oando will release their result on or before 12 June. and Aradel will release their own on or before 19th June. All these honestly affect the market react, and the market react. So most of them, they lost, and that is why you see heavy loss in the oil sector because of that simple reason. Well, let tell you. Somebody said that I cannot release it by the end of May. I will release it 12 June. When is 12 June? This coming week, Friday. So it's not far. It's just that is the market. Some people overreact. Some people, they take it lightly. But that's what really affected the oil sector. And I can tell you, this will be another story. Because people are expecting, and I believe that they will keep to their word, and you will see changes both in the oil sector and other sectors.
Okay, so Mr. Owoturo, let's just talk about this in terms of the corporate governance issue of this. Oando has missed deadlines now, the March 31st deadline. This is not the first time. They've got a history of this. At what point now does a reason, because they gave the reason, cited the Naok acquisition as the reason why they delayed this, they delayed the filing of the results. At what point does this reason start to become an excuse?
Well, so ordinarily, when you do such, a company does such a major acquisition, you could have, depending on when the transaction was concluded, it could have impact on the timing of the audit. So ordinarily, it shouldn't raise any eyebrows, but we all know that Oando has certain antecedents, which is what is creating the concern. But we'll watch. They have promised a certain date, so we'll wait for that date. If they do release on that date, then maybe they've bought back some trust. If they don't, then the market will punish them for it.
Remember we talked about trust, that it can't be bought. Well, let's see if there are any. But let's talk about these numbers. Now, when they land Friday, June the 12th, what should be, because the audited results is already showing a decline in revenue. So what should investors be expecting? Because we already saw that year to date, they increased by about, say, 24%. Investors are buying it. What are the markets? What is the market actually pricing in for Oando at the moment?
Oando is the one of the oil sector that is grossly undervalued. And it was grossly undervalued because for the last 10 years, they did not pay dividend. And don't forget that most of the investors are minority shareholder. What take for them is either they take the dividend or they take bonus. Of course, Oando declared bonus 2 times last year, but that is not good enough. People want to take something into their pocket. The MD promised that for the year ended 2025, he will pay dividend. And we take him on that. And I believe by the time they declare their 2025 was dividend, you will see the price of Oando will change. You cannot imagine. This is a leading oil industry, indigenous oil industry in the country. Recently, they signed contract with Angola for their corn 13 block, and that produced 483,000 barrels. Which of the oil company that is quoted that does it? Aradel doesn't do that. Seplat doesn't do that. But today, as I'm talking to you, when you look at the value of Aradel, you are talking of over 8 trillion. When you look at the value of Seplat, you are talking of over 7 trillion. When you look at the value of Oando, it's less than 600 billion. This is not where Oando is supposed to be. Oando is supposed to be either ahead of them or at par. And I believe you that once they come with the dividend and they change, we have seen their year ended an audited result with 30 naira dividend. I do not know any company quoted in the Nigerian exchange that have an earning per share of 30 naira and trading below 100 naira. Only Oando. So why? Because people are still waiting for the corporate action. But if the corporate action match with their performance, I can tell you the sky will be the limit for the Oando.
Okay, so Mr. Owoturo, I just want to talk about, you mentioned Aradel there. Aradel has also missed the filing, and this is the first time thing there, this is the first time offender, let's just say that, but Oando is a serial offender here. But Aradel was promised June 19th. Does the rule of the market apply to Aradel? Because we saw the Aradel being beaten down, I think it was on Wednesday or Thursday, they lost about 180 something naira from their share price. Does the market punishing Aradel for missing this deadline, or what are we seeing now? Does the same rule that applies to Oando, is this supposed to be meted out to Aradel as well?
So the rules of the NGX are applied uniformly across board. There's no discrimination. So, but investors will react. Investors always have sentiments. One of them is it could be historical. So, for example, Oando is underpriced. There's a historical antecedent to that. Aradel has done very well in the last since they listed. I think they listed at about 700. Thereabouts. It's trading a little under
1,700
currently. So they've done pretty well. Market could be reacting to that news, definitely, because don't forget that one of the crucial things for listed companies is corporate governance. Once investors have concerns about corporate governance, there's a significant impact on the price. But we may not know exactly why Aradel declined in price. It could also be profit-taking. The stock has hovered between just under 2,000 in the last few weeks, between 1,918, 2,000 in the last few weeks. So it could be profit-taking. It could also be a reaction to the delay in the filing of the accounts.
So you're saying it's a one-size-fits-all for any market or any stock that, or any company that delays in filing, regardless of the context of the situation?
Well, the context matters. My point is that the NGX will apply its rules uniformly, but investors will react based on sentiments, and we are not in control of those sentiments. Now, Oando has a history. Aradel has fewer years of operation, so probably still it has not, people have not formed an opinion about Aradel the same way as probably they would have formed about Oando, for example, yeah.
Okay. So, Alhaji, Aradel's numbers, they're going to land June the 19th. What should we be expecting from Aradel?
Well, for me, Aradel has already gained momentum this year. It opened with just about 800 naira. It went as high as 2,000. That is gaining more than 150%. In 5 months, you gain 150%. So whatever you are seeing for Aradel now is just mere adjustment. Because when you look at it, most of the holder of Aradel, they are happy. They have gained more than 100%. If you want to take your profit, you saw it be. But I can tell you, Aradel is a stock for the future in view of their acquisition with the Renaissance. Now it becomes a subsidiary of Aradel, and I can assure you, by the time they release their Q1 2026, the game will always change. And Aradel is a unique company. I have never seen a company that behave like Aradel.
Okay.
They will have Q1, Q2, Q3.
Okay.
All together, by the time they declare Q4, will outweigh the entire Q1 to 3 cumulative. So it's a unique company that we have not seen anywhere in the exchange. So even if you think you know Aradel, you don't know it. Yes, because they will come with a quarter result that will outweigh the whole 3 cumulative one. Okay. And that happens in Aradel, and Aradel is good in that. So I can assure you, whoever sell Aradel will have to top money to buy more.
Thank you so much, Alhaji. We'll leave it there. Thank you so much, Mr. Owoturo, immediate past president of the Institute of Chartered Registrars, and also Mr. Kurfi Garba, the CEO MD of APT Securities Limited. Thank you for sharing your thoughts on business, on capital markets, rather.
It's been a pleasure.
And that's a wrap on this edition of Capital Markets. Always remember, markets are bullish or bearish. Knowledge is your best investment. Thank you for watching, and we'll be back.